I'm feeling high.
Subscribe, like, comment, and share this video around the Forex community to help others achieve their dream.
The 5 ways you can know when to buy or sell in the Forex market. Knowing when to buy or sell in Forex trading is a critical skill that involves a combination of technical analysis, fundamental analysis, and risk management. Here are some key concepts and strategies to help you make informed decisions. Technical analysis. This involves studying price charts and indicators to identify potential market entry and exit points. For example, if a currency pair consistently bounces off a certain price level, traders might consider buying when the price nears that level. Conversely, if the price consistently stalls at a resistance level, selling opportunities may arise. Fundamental analysis. Fundamental analysis considers economic factors and news events. For instance, if a country's central bank raises interest rates due to a strong economy, its currency might strengthen. Traders can buy the currency in anticipation of potential gains. Conversely, if economic data reveals weakening conditions, selling the currency might be prudent. Trend following. Trend following involves identifying prevailing market trends and trading in their direction. If a currency pair is consistently making higher highs and higher lows, it's in an uptrend. Traders might look for buying opportunities during pullbacks. If the pair is making lower lows and lower highs, it's in a downtrend, prompting traders to consider selling during temporary bounces. Breakout strategy. A breakout strategy involves monitoring key support and resistance levels. If the price breaks above a significant resistance level, it could indicate a potential uptrend. Traders might buy on the breakout, expecting further price appreciation. Conversely, if the price breaks below a support level, it could signal a downtrend, prompting traders to consider selling on the breakout. Candlestick patterns. Candlestick patterns offer insights into market sentiment.
I'm feeling high.
Subscribe, like, comment, and share this video around the Forex community to help others achieve their dream.
For instance, a dodgy pattern, a candle with an open and close nearly at the same level, can signal uncertainty. If it forms after an uptrend, it might suggest a potential reversal, prompting traders to consider selling. Conversely, a bullish engulfing pattern, where a large bullish candle follows a smaller bearish one, can indicate a potential uptrend, suggesting a buying opportunity. Remember, these methods aren't foolproof, and successful trading requires practice, experience, and proper risk management. Combining multiple strategies and staying updated on market developments can enhance your decision-making abilities.
I'm feeling high. I'm feeling high.
Subscribe.